Good morning to you, Jenny. Thanks for taking the time. This is one that, if I recall, that you are a fairly frequent shopper at.
Yes, I have to say I probably contributed to the fact that they're in pretty positive territory right now. I'm a frequent Target shopper. So they're up about 6% for the year, about 8% for the month. They're up 30% from their March lows. So they've really done a great job in this kind of pandemic time getting their products to their customers. So they've of course benefited from so many of their rival stores being closed because back in March when the shelter in order kind of started, Target was one of the few retailers that remained open. So this earnings report will span from the time of May through July, which means of course it will be covering any coronavirus related headwinds and tailwinds. So as far as tailwinds go, digital demand has accelerated from 33% in February to 282% in April. So digital growth is going really well for Target, and the street loves this. They've also added 750 fresh and frozen grocery items to their in-store pickup and curbside delivery. So again, they're really doing everything they can to make their consumer happy, whether it's digitals or groceries. They're doing a great job of that. However, it's important to note a tailwind here could be their margin. They've really shifted towards digital and moved away from these higher margin consumer discretionary items, which could actually be weighing on their second quarter bottom line. So we'll see with these results tomorrow pre-market. However, the thing everyone loves to talk about on social media is last mile delivery. I've mentioned a few times on this show, but we are the greediest consumer we've ever been. We want our goods fast and we want them cheap. And Target, partnering with Shipt, has done a really successful job of that, which brings me to our first tweet, which says, Shipt is both the greatest thing on earth and the worst at the same time. The ability to get anything I need or want from my local Target delivered to my door within hours is both a superpower and a curse. Same day Amazon Prime has nothing on Shipt. So, back in the era of, I'd say it was about March when there was no toilet paper in the city of Chicago, Target was actually one of the only ones that I think still had toilet paper, and they delivered it to me within like 24 hours or something. That was crazy because toilet paper was in such high demand. So ever since then, I've been a pretty loyal Shipt customer. And I think this sentiment is reflected, of course, not only in this tweet, but just on general social media. Now, our next tweet focuses a little bit more on moving forward and kind of Target's guidance. So our next tweet says, shouldn't Target have some potential issues going into the end of this year? Back to school sales will be lower in every group except tech. This quarter's earnings will be great, but I can see it struggling soon. So Cowen actually issued a report this morning that was super interesting that said that this year's back to school season could be prolonged and it could be really affecting apparel sales. Now, Sean, when it comes to, of course, Target, they sell so many different things, but could back to school sales have any impact on their forward looking guidance, which I believe their guidance this quarter will also include holiday sales?
Yeah, I think there's a potential for there certainly will be an impact from back to school sales coming in a little bit, but I think the bigger thing is there anything that can offset that? And actually they do sell a lot of goods for the homes. I know a lot of people when they get their first apartments, even when they go off to college, get in their dorm, which no one's doing now, but people when they get apartments or whatever it is, they do a lot of their shopping at places like Target and some in particular to Target. So I think the demographic mix favors them in that regard. And actually, the goods that they sell for the homes are typically a little bit higher margin than a lot of the other things that they sell there. So the only other place where back to school could hurt them is electronics, but they're probably going to get a little bit of a benefit from people upgrading their electronics. So that will take some of the sting away from the back to school trend going away. And then, like I said, they're probably going to pick up some sales in their home goods areas. So I think there's the potential for the back to school impact not only being mitigated, but they actually may still come out a little bit ahead from some of the trends.
It's a really interesting observation, Sean, especially given that we've seen the strength in home improvement as more people are sitting at home and you see that thing that bothers you and you just want to fix it. You want to get it shipped to you quickly to make sure that it is a more acceptable thing, or you want a new chair because you're spending more time in it. So I think it's a really great point, and we'll see how much it can offset some of these other areas that Jenny points out that are maybe struggling. But Jenny, always a pleasure. Thanks for taking the time this morning. Jenny Horn, TD Ameritrade Network contributor. So we say goodbye to Jenny. We want to welcome in the co-founder of LikeFolio.com, Landon Swan, to join the show. Landon, this is one where, hey, you guys nailed it on Home Depot. Everything looked great, but sometimes it's already priced in. Is that the case with Target? Are things looking great? And if so, have we just rallied too far?
Yeah, I appreciate the feedback there. Yeah, we did well on Walmart and Target. I'm sorry, Walmart and Home Depot. Really big numbers from both of them. They're selling a little bit, 1 or 2%, not much, but the market is pretty flat today. So it's not a market-driven sell-off. It's a priced-in type sell-off, even though it is a light one. Now, the story with Target is a little bit different. Walmart, if you remember, our year over year on their fiscal quarter was plus 32%. Target, we're looking at plus 13%. So we're seeing still a strong quarter, but much, much weaker than it was at Walmart. And you can see here that far right, the colored bar, the strongest bar there, the Q2, that is the one that's about to be reported. The far right one is the current quarter. That's just a pace number, so you can kind of ignore that. But it's very similar to in the last two quarters in 2019. And so while it is up year over year for a Q2, it's way off of that really big quarantine quarter of Q1. So we're a little bit concerned that expectations may be too high. And I think that Wall Street's kind of, aware of that. They're selling a little bit of Target today, but I wouldn't be surprised if the selling picks up more tomorrow after they report, if they do come in a little bit lighter. The other thing that we looked at, Jenny mentioned shipped, and that is a big factor for Target. Walmart yesterday, I think that they reported plus 97% year over year. Our official number on their digital was 94, so we're very close there. With Target, we're only seeing plus 70, which, is a really big number. But when you factor in the fact that everybody is using delivery and digital, it's going to be expected to be extremely high. And if Walmart posts 97 and Target posts 70 on digital, that's not a good thing. You can see here the clear rush to use digital. Just like Jenny was talking about, you can't go out and buy things, so you get things delivered. That is pulling back down more to normal. It's still elevated, so we did change some behaviors. And what's great about Shipt is, it costs $10 a use or $99 a year for unlimited. And so there is some stickiness there if they're getting people on those memberships. I think that's going to be a focus of the call for analysts. They're going to look at that and ask how many people are getting on these recurring memberships and continue to be customers of the store. But just all in all, with Target at basically all-time highs yesterday and pulling back a little bit today, Walmart posting huge numbers, and then selling a little bit, we just don't see the same kind of numbers coming out of Target. And if expectations are at Walmart level and then Target misses those, I think we could see a little bit of a pullback tomorrow. Alex?
Yeah, no, and
So,
Sean,
Lena,
if you want to jump
quick
in here,
question
any
for.
questions you may have, because there's a ton of stuff to unpack.
Yeah, and so the one thing I would be curious about here is how the breakdown is in demographics, because I think there's something said for some demographics are maybe going to be a little bit more valuable right now than others, and perhaps even something like Target has a pretty good niche going in a demographic that was receiving a lot of stimulus checks, a lot of other benefits over the past couple of months that may have supported spending at Target. Have you seen anything break down amongst the different age groups, or do you suspect that there could be maybe some benefit to the millennial population really being kind of big fans or almost evangelists for Target as the place to go shop?
Anecdotally, yes. All the millennials in our office love Target, especially Shipt. Megan, head of research, is a fanatic of Shipt. But we don't have any data on demographics. Twitter doesn't break it down like that. But yes, I would agree. All those stimulus checks are going to people who fall in that category. But I would say that it probably works the same for Walmart. If you're getting a stimulus check, you're probably a customer of Target and or Walmart. And again, it's just based on that reaction that we saw today off of really strong numbers, but predictably strong numbers. I just worry that the street's expectations may be too high. And what's interesting is, keep in mind that LikeFolio, when we track purchase intent, it's basically feet in the door or feet on the website or clicks on the website. It's not how much they're spending. So we don't have insight into ticket size. But last quarter, we know that Target had a move away from high margin items like apparel and more into groceries and essentials. That's part of the quarantine culture, I suppose. But I think that if that continues and the number of feet in the door aren't as strong as what Walmart posts, which is what we're seeing, again, we could have a little bit of a pullback. The silver lining here is, though, that Target has a much higher consumer happiness level. We're seeing them at about 65%, Walmart's at 50%. So long term, I love Target, but at these prices, I'm not a buyer. I'm waiting for a pullback.
Landon, last things here as we got to wrap this up, but I recall, which seems like an eternity ago, though. Last year, the big winner of retail was Target, and I wonder, if I look at your data, it does seem that 2019 was a fairly strong, year for Target. How much of these, maybe relative performances are actually just because the bar was set a little bit higher, or were companies like Walmart executing just as well in 2019?
It's tough. I think that Target and Walmart did really well in 2019. Walmart has had a fantastic shift into digital. It took them a few tries. There's a little bit of history on that if you want to research it. It took them a few tries, but they finally got it right now and they're nailing it. Target is also executing well, and I think we talked about this yesterday. It's a little bit of the economies of scale issue where the really big guys are starting to crush the smaller competitors and the mom and pop stores. You just don't have a chance when you're going up against Walmart, Target, and the likes of Amazon. And I think that that's just starting to happen. Plus, the economy was doing really well. If you go back to January, February, I mean, things were unbelievably well. And now, of course, everything's changed, but you're sending out stimulus checks and inflated unemployment checks. And so a lot of people are going out and spending. Target is executing extremely well. But again, just off all time highs with expectations probably really high. I'm a buyer, but not at 136, probably a buyer at like 120, 125.